Y'all, welcome back to my YouTube channel. Of course, my name is Marlisha. But let's talk government shutdown. So let's be honest, things are a little crazy right now. Tons and tons of homeowners and just hardworking families in general are being affected by the government shutdown. A lot of people are not being paid right now at all, and some are on the verge of not being paid. There's also a lot of layoffs and different things that's going on right now. So it's a little crazy. However, I do want to be honest because a lot of people are not getting paid. Missed paychecks typically lead to missed mortgage payments, and so the reality of it is that we probably will see a lot of foreclosures that are upcoming, which is super sad because it's really out of people's control. But I do want to go over a couple options that you may have if you are in that situation. So missed mortgage payments typically lead to foreclosure. So what homeowners don't know is there's usually options that you have before the bank take your home. So they usually just don't come take it automatically. There's usually options and letters that you'll receive prior to them taking it. So number one, the first thing you want to do if you plan to keep the home is to explore loss mitigation options. So a lot of times if you're not working at all, the bank has an option called forbearance. So if you call them and just say, hey, I'm not working, or whatever the case might be, this is what's going on, you can apply for a forbearance option. A forbearance option basically stops all payments for a certain amount of time that they approve you for. And then that just stops the payment, but it won't allow a foreclosure to take place typically. Another option is if you're behind quite a bit, they typically sometimes they can do a partial claim notice where they basically take the past due amount and put it kind of at the end, quote unquote, until you sell or refinance. But usually at that time that you sell or refinance, that's going to be due. They also have a loan modification options that they have. They have a lot of loss mitigation options that you probably want to explore. I don't want to go over the details of those because I don't want to tell you wrong, but I do know for a fact that those are options. A lot of my clients have taken those options. The second thing too that a lot of people usually when things are happening and people are stressed and different things like that, they just let the house go. I don't recommend it. Here's why. Typically, if you've been in your house a long time, 9 times out of 10, you probably have a lot of equity built up in your house. So let's say, I don't know, you bought your house for $50,000, or let's be realistic. Let's just start at $100,000, right? $200,000. You've been in there 8-9 years, so now your house is worth $285,000. You owe about, I don't know, $150 or whatever. So the difference between what it's worth and what you owe is considered equity. That's cash, that's equity that you have earned by paying your mortgage payment, being a homeowner, and so forth. And that can be a lot of times anywhere from $75,000, $100,000 plus or more. So let's say the bank comes along and they take your house, you don't get that equity. The equity's gone. Once it's gone, it's gone, right? But if you sold, let's say you put the house on the market, right, for what it's worth, and you sold the property, that equity is a check. You get that equity in a check, of course, or a wire at the end of closing. So you can still, if you just need money, you just want to start fresh and just kind of start over, don't want the burden of a mortgage right now, and you just want to rent for a little bit, rent something cheap, but you want a big check out of your equity, you could sell. Selling obviously will relieve you of the mortgage payment. You'll also be able to get your equity in a check. So let's say you got $75,000 in equity. That's a $75,000 check that's coming in your pocket versus if the bank takes it, you get zero. They take it and they put a foreclosure on your record. Now let's be clear. It's really hard. It's harder to get approved for a mortgage when you have a foreclosure. So let's just say you got a couple late payments right now. The rule is right now, here where I am, if you get a late payment on a credit account like a car or a credit card, you got to wait 12 months before you can buy again, right? I don't know what the rule is in your specific state, but that's the rule here in Arkansas and most places. Versus if you get a foreclosure, you typically gotta wait a minimum of 2 years or more, depending on how your credit looks at the time you try to reapply. It's way harder to get a foreclosure because once you get a foreclosure, because at that point you consider like a liability to the bank that's likely to happen again. So a lot of times it's better to, if you know you're going to lose the house and you've already explored all of the loss mitigation options, sometimes it's better to sell. That way you get cash, you got your equity, cash in your bank, you can start over or whatever you want to do. And then again, when things pick up or get better, you can buy again. It's not the end of the world, you can buy again. But I do not recommend to ever let the bank take your house at all. Sell it, explore loss mitigation options. Homeownership is a beautiful thing, and it's not always a walk in the park, as many of us probably do know. So definitely call around and see what your options are to stay in the home, and do your due diligence. Don't ignore the letters and stuff. I know it's a stressful time for a lot of Americans. I know SNAP benefits and just everything is being cut off, and everything is going on. A lot of homeowners are being impacted. But I at least wanted to come on and explain your options. There are options. There are loss mitigation options. There are forbearance options. There are partial claim options. There are loan modifications options. There's a way they can do partial pay. Different things that they have, the loss mitigation department has, if you call them and talk to them and explain to them what's going on. However, if you just want to move on from the house and you want to just pull out your equity, you may consider doing a refinancing or just selling the property in general. Call a licensed real estate agent and sell the property before you let the bank take it. Okay, I hope this video was helpful. Once again, my name is Marlisha. I am a licensed real estate agent, real estate broker in the state of Arkansas and state of Texas. If this video was helpful to you, be sure to like and subscribe. This just helps me put out more content for you. Bye-bye.